Hello and welcome to another episode of Talk FS. In today's episode, it's slightly different to our usual one. So, with Talk FS, what I love for us to be able to do is share amazing insights as we've been doing already so far. But also, what I want to do for you guys as an audience is give you insights into the market, insights into recruitment, and give you some useful tips whether you're looking to change a job now or in the future, or if you're looking to recruit staff, give you a bit of a flavour as to what's going on in the industry. So today's guest requires no introduction for those who are familiar with the Premier Jobs UK business. An individual that's been with Premier Jobs for many, many years and provides the most amazing service to candidates and clients. So, Adrian, welcome to the episode.
Thank you. It's good to be here.
Yeah, I'm glad you're joining me because you've got a fountain of knowledge on the industry, supporting financial advisors, power planners, mortgage advisors, equity release advisors, and everything else that comes with it in terms of recruitment. So what I'd love to do, we're mid-November now.
Mm-hmm.
It's a nice time in the year for us to be looking at the year in reflection.
Sure.
So for you, how has the financial planning market been when it comes to recruitment in 2024?
It's actually been a really challenging market. It's been a lot drier than what we would normally have anticipated. And there's probably a lot of reasons behind that. I think I started to notice a little bit of a shift in the second half of last year. And then that's really continued, throughout this year. So, yeah, it's probably not been the market we would have chosen or aspired to be, but, we've continued to be successful and work in a slightly different way.
Fantastic. And, I really appreciate your honesty there. You mentioned where it's sort of been sort of second half of the year. Do you think there's been external factors going on that's had a knock-on effect towards that?
Yeah, because when I was saying second half, so that was second half of 23 is when we started to notice it, and I suppose the full impact of that has probably been felt this year. Consumer duty, did kick in exactly at that sort of time. And I'm not saying it's purely down to that, but I think that's one key factor. And some of the businesses that had to reshape their models to make allowances for that. But if you were listening to any press, particularly last year, you couldn't avoid cost of living, interest rates, the impact it was having on us, personally. Inflation was, I don't want to say getting away with itself, but it was at different levels to what we've been used to for some period of time. And the one thing which I'd always noted is that you didn't really hear much soundbite in terms of how it was impacting on the businesses. So you would hear about how it was affecting us as individuals, but not necessarily, the paymasters. And ultimately, if a paymaster has a reduced income, then that's going to limit their aspirations for growth, which will have an impact on recruitment.
Yeah, that's really interesting. I'd love to come on to the impact of consumer duty in a minute.
Mm-hmm.
But just looking at, some of those personal finance elements, like you said, the cost of living, the interest rates, is that something you've been hearing from candidates when you've been talking to them, that they've been feeling that pinch?
Yeah, I think from candidates, they have been feeling the pinch, in their own pockets. So, their benefit schemes are becoming even more important, sort of thing. And that might have prompted some to, reevaluate if they're in the best place. But a lot of what we do, is, as you'll know, Ryan, is we do as much work with companies as well. And that can be to do with acquisition, or could be to do with just helping them make sure that they've got the right sort of inspire in place, to attract, high caliber talent. So we do sort of understand how they've been affected as well, sort of thing. So it both sides have been equally hit.
Yeah, that's really good to have that balance, isn't it? And so, are you also seeing from both your candidates and clients that they're wanting to seek your opinion more, even if they might not be looking for a job right now?
Yeah, absolutely. I mean, it's always been like part of what we do anyway, sort of thing. It's just to give like an overview in terms of the market, in terms of the developments and what's happening, how things have been reshaped, if there's new players coming to it. But I think more than ever, particularly on the candidate side, there's been an awful lot of like sense checking to see if actually are they paid the market rate, are they on the right sort of like bonus scheme? Is there something more alluring out there, to meet their needs? Because I think that they're probably a little bit more cost conscious than they would have been previously because their own, family expenditure's gone up.
Yeah. So potentially over the last sort of 18 months or so, people are having to consider not just, you know, their enjoyment from the role, are they being fulfilled? It's also, is it paying the right level of bills? Because everyone's bills have been going up. And so people are having to maybe do that toss up between finding a new role, even though the one they're in right now they love,
Yeah.
but maybe the numbers can't stack up. And so, because from my perspective, I've seen a lot more hesitancy in the market, hesitancy from candidates, hesitancy from clients, and the time to hire is slowly crept up. Would you say that's fair?
Yeah, I think that's very true. Because like a lot of the times when we're talking to candidates, it's not to unsettle them. It actually perversely is to reassure them. That they just need to know that actually what they are being paid is fair. And reflective in terms of what the market sits at, sort of thing. So that they're not like looking over the shoulder and seeing an ex-colleague of theirs who earning a lot more.
Yeah, definitely. Because I think if we rewind the clock a little bit further than the 18 months, if we go back to 2022,
Yeah.
that was then when we had the crazy summer of activity, wasn't it? Where just every man and his dog, was moving, crazy counter offers being thrown around. People could be going for an interview somewhere, then going to resign, and then, wow, getting a fairly significant pay rise
Massive. Yeah.
just because they were active in the market, which is a quite weird scenario in itself, really, isn't it? But I think that then had a trickle on effect into 2023, didn't it? But then when the appetite from the businesses came away, you had a situation where people thought they could go out and, get higher packages, but then they were coming back and the firm was like, well, I can't afford to meet that request anymore. So then people then heard about that level of activity taking place, and then it was nervous, and so there was a bit of hesitancy. And like you say, I think it's nice that people can have a long-term relationship with you to just understand that, you're not constantly trying to move them. You just want to see them do well in their career, and you can be that place that they go to of, am I on a good package? Am I on a good gig?
Yeah. And I think people just need to have like a reassuring voice, just to every once in a while, just to make sure that everything is as it should be, sort of thing. And because look, if you're in a good place and you're happy and you're settled and you perfectly align with the values of the business, then you want that to continue. And I suppose the enjoyment I get out of the job actually is, seeing how people prosper, and move forward in their careers and do incredibly well. So it's not always just about moving them. It's actually being part of their journey throughout their career. Yeah.
Fantastic. And in terms of that sort of sense checking, that's something I'm seeing a lot from companies, because a lot more of my role is with the company interaction and the candidate interaction.
Yeah.
And I'm probably, if I look back over the last 18 months, I would say it'd probably be every twice a week I'm having to be, one of my clients or future clients is contacting me for guidance on salary benchmarking. Is a massive one, salary benchmarking. And I think that's just where things have just moved so rapidly in a 4-year period. A lot of firms who haven't been active in the market for that whole period just don't know where to price themselves to get the right caliber for what they need in their business at whatever point in time. So it doesn't surprise me that you're seeing it from candidates as well, just wanting to sense check their packages, because there's so many different ways to package it, isn't there? There's so many different varieties out there, particularly when you when you're looking at the financial advisor market as well, when you've got bonuses when it comes to, splits of the ongoing income, the new business, whether it's a company provided lead, whether it's self-generated business, there is so many ways to shape that bonus scheme,
Yeah.
monthly, quarterly, annually as well.
Yeah.
Also from not just a revenue point of view, but also from a compliance point of view. Are they doing the right behaviours? It can be quite hard to understand the apples and pears sometimes, can't it?
Yeah, absolutely. Absolutely. There's so many nuances in terms of, how packages are put together. And it's not just what the bigger number is. It's about finding the fit, you know, that works, and that everything, like building blocks, I suppose, sort of thing, and all of the blocks together need to come, so that it's complete, for that individual.
And earlier on, you mentioned about the impact of consumer duty. So that came into effect in the summer last year, 2023. And you mentioned you've seen a bit of a sustained impact from that. If you don't mind, give me a little bit of insight into how you think that's affected the financial planning recruitment market.
I think what it's done is it's shifted the companies in terms of the resources that they need in the business. So um, before consumer duty, you would have had probably a greater appetite for more financial advisors, particularly those that would go out and create new levels of business. And what consumer duty's done is, in a good way, there's many positives from this. It's just made sure that that the advisors are servicing the clients as they should be. But to be able to do that, they need to have a better infrastructure in the organisation. So they've had to take on administrators or more power planners, sort of thing, so that the burden isn't purely on the advisor, because they need the advisor to be customer facing. That's really what their job is. But some of the businesses just weren't probably resourced to the level that they needed to be fully successful in the consumer duty world.
And just touching on that last point you made there about not resourced to the needs pre and post consumer duty, we've seen a massive increase, haven't we, in terms of power planners, support staff recruitment.
Yeah,
I would love your take on it, because from my perspective, I feel every company out there is asking for experienced support staff.
yeah,
I don't feel there is sufficient amount of talent to satisfy that need back then and also still now, because you got to think some companies have potentially even doubled their support staff.
yeah,
And if the whole industry is doing that, there definitely wouldn't have been twice the amount of talent needed for the demand. And so everyone's wanting the same thing.
yes.
From your perspective, what challenges does that then present when it comes to trying to recruit?
Well, when you got a shortage in the market, what you'll also find is that clients are really then reluctant to lose good quality staff as well. And so they'll give them significant pay rises to try to retain them. So there's always like supply and demand, sort of like pressure, and if you don't have enough. The same argument applies to financial advisors. For many years, actually, there's been an argument that there's just not enough of the need, and it just means that they've got like a high premium value, I suppose. And what we're seeing is not that they power planners and administrators didn't have an importance within the organisation, but I think that they are becoming a lot more important and valued than they were previously. Yeah, so it just makes it difficult. And what if a firm isn't going to be open minded to take in like apprentices or juniors, or less experienced, and invest in them, then that's not actually going to address the root issue. So there does need to be like an openness for new blood to come in, but it will take a little bit of time, and we might be halfway through the cycle really before the inexperienced have become experienced, sort of thing, so that the need has been satisfied.
Yeah, exactly. Your apprentices, your juniors, but also, I guess, like we saw during, those lockdown years of a hell of a lot of people coming into mortgages as career changers. We saw
Yeah.
that more with mortgages than we did financial planning.
Yes.
Maybe we need a batch of career changers into IFA admin, into power planning to,
Yeah.
get people who've been 10 years as an administrator for completely different industry and, make them aware of financial services and financial planning and what a great fulfilling industry that can be. And that might help solve that shortage. But we need companies willing to offer that investment into people to teach them how to, do all the bits that an IFA administrator or power planner would do. And yeah, like you say, someone who joined as Consumer Duty kicked in at best has 18 months experience. Well, if sometimes your client's requesting 2 to 3 years experience, even now they still don't hit that criteria, do they?
They don't. They don't. They don't. No. And it is going to take a little bit of time, for it to just work its way through.
Yeah. Okay. Then moving the conversation on, another element I was asked recently by one of the clients I was speaking to, they asked me, how do I feel the split of employed versus self-employed when it comes to financial advisors has evolved?
Yeah.
Now, you've been in financial planning and recruitment for coming on 20 years now, so you've probably seen the cycles where it's shifted from one to the other, maybe back to the middle. From your perspective, in 2024, what's the split of employed versus self-employed for financial advisors been?
Yeah, I would say 75-80% are now employed positions, and yet we've had, like you say, we've gone through cycles where it's been the complete opposite to that. So, like in recent years, there seems to be a lot of momentum in terms of acquisitions, of businesses, and often when you get a consolidator who has bought an IFA firm, often from managing directors or etc., who built the business, who have then looked to exit. What they need to do is then replace the advice piece that they're losing, from there. So what they would tend to do is look for like a quality employed financial advisor. So at the moment, there definitely has been a shift, and I think there's also been like a shift in type of advisor, because we've often heard of the terms hunter farmer, sort of thing, and people would have like a tendency to lean one side to the other. Farmer very much client centered, very much driven by servicing, nurturing, growing, cultivating, an existing book of clients, and then the hunter is the gatherer, who goes out and creates and finds new sources. Whereas, particularly like with the work we've been doing with the consolidators, their focus really is retention. That's their primary focus. So that would lend itself more to a farming type, candidate on an employed basis. But I mean, yourself, Ryan, here, we've got options for all. Whether it's employed, self-employed, if they're a hunter, a farmer, somewhere in between. And our job is obviously just to, find out the true essence of the person, and find the environment which is going to bring the best out of them.
Yeah, really, really interesting. There's a lot of different points we can, pull from that piece there. Prepared to maybe even make a bit of a prediction here, and it occurred to me while you were talking there, in terms of with the farmer element, it makes a lot of sense with consolidators, or not even a consolidator, even just a medium-sized firm who's gone and bought a book who doesn't deem themselves a consolidator. But if you've outlaid significant amount to
Right.
buy those clients, you want to make sure that you've got someone in who's going to look after them and get your highest return on investment as possible. I wouldn't be surprised if we see in the next year or two a new breed of role coming through, which is maybe like a BDM for some of these medium to large size advice firms, where
Okay.
someone's role is purely just go out and win business. And maybe they're authorized, maybe they're not even authorized, but they're just a business development networker, and they just bring it back in because that's something, like you said, many years ago, that would have been part of an advisor's role. But with all the additional responsibilities they've now got, that's having to be potentially, put to one side. And if it's not someone's skill set nowadays, maybe that's a new role that might come in the horizon.
Yeah, something like that, absolutely. Because retention is important, but equally growth. You can't. You've always got to bring in new blood in. Doesn't matter what organisation you're talking to, and the advisors that we know, they've got a saturation point. There's only so many hours in a day. There's only so many customers that they can truly look after, sort of thing. And if their focus is heavily weighted towards that, there does need to be someone that is going to create new lines of inquiry in whether it's a BDM like role that you suggest, or I don't know, a separate type of advisor that doesn't have the responsibility of the retention, just to actually go out to network, to grow, to build, sort of thing, and bring sort of new customer base in.
Yeah. And then just going back to also the point you mentioned, obviously in terms of my question, it was about the roles we've got available,
Yeah.
is more the employed self-employed split. And you mentioned sort of more 75, 80% is of new recruitment at the moment is employed focused. Let's not forget about the self-employed here a second.
Yeah.
So from your perspective, when you are dealing with someone who is or wants to be self-employed, what's important to them?
The natural assumption would be this the split, in terms of what are they going to get out, of everything, and that is an important factor. Don't get me wrong, but it's not the overriding factor. They've got to align themselves with a business which has values that they would share, a place that gives them the opportunity to grow, to develop. We're seeing like fintech businesses as well. So there's like an audience out there that want to be more driven by the efficiencies of technology, and leads as well is a real critical piece, because there are those that are out there that have enough connections on their own, but you would find probably the majority need something to just bolster their business opportunity. So yeah, leads is a really critical factor.
So it's much more of a holistic approach. You've got to look at the split. The numbers have got to stack up, but the values is a key element. The support has also got to be there. So you're having to weigh up all these variables when someone is or wants to be self-employed then.
Yeah, it's about what is best for that person, sort of thing. And sometimes you have to educate them because they can see like a percentage and think, well, that's what I want. And it's very easy to be attracted by that percentage, but that percentage might not offer other things which are actually really important to the individual, sort of thing. So our job is to really match. I suppose in a way we are a bit of matchmakers. It's about bringing the right sort of candidate with the right sort of company, sort of thing, so that they're going to bring the best out of each other. And everyone's got different drivers. There isn't a right or wrong. It's about this person is fixated or driven purely on that. And if it's on money, purely on money, then you are going to be looking at what the highest fee is. But in my dealings, most people aren't purely about the money. It's about giving really good value and service to their customers. Doing it in a commercial way. They don't want to get the worst deal, but it's about having the right sort of infrastructure, the right people that they want to work alongside, and so that they can provide first-class service to their customers.
And I guess that's where you as an expert, as a experienced financial services recruiter, your support is invaluable to them because you can decipher what's available. For many of our situations, we've dealt with our clients for years, not months.
Yeah.
Some start running into the decades, don't they? And that enables you to be able to give them the true advice of exactly what the proposition offers, because you've had candidates join there, you've had the candidate feedback after they've been there 6 months or longer or whatever, and you're able to say, look, there might be a headline rate out there, but I know this other option that maybe isn't as attractive on paper, you will genuinely be happy. And I can say that hand on heart. And so I think that's then the value an experienced professional offers, just like a financial advisor does. There is returns available and there are, products that are the cheapest or, the best marketing behind them. But actually, sometimes your understated stuff is what, the vast majority of the business goes to.
It can be what matters the most. Yeah, and like, we do invest an awful lot of time in getting to understand the candidates that we work with, and the true essence of them and their values and their aspirations and their experience and their plans for the future. But we also invest the same amount of time and energy in terms of the companies, to really find out what they're about. Because you can have a phenomenal candidate and you can have a phenomenal client. It doesn't mean that they're best suited to one another. And I suppose that's really where our sort of insight and experience of working with both, you can get a really good feel in terms of, are they well suited, and then it's not really our job. It's then down to the individuals to really either agree with our recommendation or not. But we do invest a lot of time talking to both sides.
Yeah, I remember when I teach new people into our team, I tell them you get a recruiter's instinct. It's a gut feeling. From speaking to a candidate fairly early on,
Yeah.
I know who they're best suited to, don't you? You just, particularly the clients we work with for many years, you really understand their culture, you really understand their values, you really understand how they support the team. And you speak to a candidate and go, my God, I know where you would work best. Obviously, we'll explore all options for them, but, it's funny, isn't it? And I tell this to new people joining, and they're like, what are you on about? No, you don't. It's like, no, it is something. And then I think 6 months, 12 months in, they go, I finally know what you mean now. Now, you trump me massively when it comes to experience. I've been in this
Some experience.
11 years now.
Yeah.
But you've been in it coming up 20. Plus, your background was also in financial services prior to recruitment, wasn't it? So
yeah,
I've got to use this as an opportunity to ask you for some of your advice when it comes to people looking for their next career move. What advice would you give to them?
There's no rocket science here at all. I would always want them to just be open-minded, firstly, and to look at the whole picture. I suppose this comes back to what we were talking about, because we get a feel or a sense that, this person would suit this business and this business would really like this individual for whatever reason. But the most important thing is that, firstly, you do your basics. So you do your research. You turn up smart, first impressions count, you're positive, you're energetic, you've looked on the website. From my perspective, I always want people to be prepared, to be relaxed, to be themselves, so that the company has the true flavour, the real essence of what they're about. And if they see the real person, then they'll make the decision. And even if the decision isn't positive, if they've seen the true person, then the outcome is the right outcome. So that's the most important thing. I hate it, or I would be really disappointed if someone comes out of a meeting and they're kicking themselves because they haven't conveyed who they are. The company hasn't seen the true person. They need to go into the meeting. It's their meeting as well. It's a two-way street. You've got to interview the company. This is your opportunity to leave a good impression, but to also find out about the firm. And, if their values are, as we think, perfectly aligned with each other. So do the basics.
Yeah, often overlooked. I totally agree with you. Your research piece is so invaluable. Speaking to someone who, if you're going for a recruiter, that recruiter should be teeing you up with tons of information about the firm.
Yeah.
But you should still want to know more, because this is who you're potentially going to choose to work for or work with. And you should be coming to that interview with questions, like you say, to be interviewing them to an extent, not in a, interrogating way or whatever, but you should be, trying to assess for yourself if it's the right fit.
Well, I mean, it's often said about you spend probably more time at work than you do, with your loved ones, sort of thing. So it is an important decision. You've got to think, yeah, I can work with these people. I want to work with these people. I'm going to be inspired by working in this sort of place. So money is one aspect of it. Career develops another, but who you're working with, and you normally find in the most successful firms that there's like a group that have similar values and similar outlooks. That they're just perfectly in tune, with each other.
Yeah, yeah, fantastic. Now, like I said, I love to do on this podcast a final question. I think it's really interesting, and I love every response I get. It's one of my favourite parts of the podcast. So, what is the best piece of advice or best lesson you've experienced?
Good question, and I know that you ask it all the time, Ryan. And this will come as no surprise to you. So, and this was given to me it was given to me quite some years ago, and it was probably given in the most turbulent of markets, really challenging time. And I was given a great white shark model. Okay. And the reason for that is that great whites have to keep moving. If they stop moving, they die. They always are moving. They don't sort of like sleep. They're always finding new waters, anything like that. And that's what we need to do, not just in terms of recruiters, but I think everybody is that, you don't want to stagnate. You've always got to be looking for, fresh places to work. You need to be agile. You need to always improve yourself and continue to learn and to grow, and just be agile and open to new opportunities.
Mm. And has this year, where it's been a little bit drier than expected, brought that back? If you mentioned, you learned that many years ago, has that come to the surface again?
Absolutely. Absolutely. I mean, I've had very honest conversations with you about, how I've been feeling, because things haven't been moving quite how I would have chosen. And it makes me then reevaluate. Am I doing something different? And if not, what do I need to change? Because, the market might be different. The market will be different next year and the year after that and the year after that. And if I want to stay in the market, I need to move with it. So not leave all of my experience behind, but take that with me, but be adaptable.
Mm. Yeah, because I remember, we've had conversations through the year where it starts off like, I've not changed, I've not done anything different. And you say that as if like, that's good, that nothing's changed, because it should then be creating a similar formula. But actually it gets to a point where, like you're saying, that actually becomes a negative. If you keep saying I've not changed, it's like, well, maybe you need to.
Yeah. It's exactly that. Exactly that. And I think when I was saying that to you, Ryan, it was like, if my application was the same, if my application had dropped, then I would only have myself to blame.
Yeah.
But it was more, if I'm not getting the outcomes or the same results that I would have done, and yet the input was the same, then something needs to change. So I've always got to look at myself, what could I do better, for the clients, for the candidates, all the time.
Yeah, fantastic. Well, that brings me to a really nice point to end this sort of episode. So thank you for coming on. If you guys are listening and you are interested in sense checking your package, whether you're a candidate, whether you're a client, please feel free to reach out to us. Please feel free to reach out to Adrian. He's an expert on his area and will provide you the nicest quality of service. It's evidenced by the amazing reviews he gets. Often paragraphs and novels get written about the level of service he provides. So please do reach out to him, whether you're, like I said, wanting to move right now, or even if it's just, I'm not sure, and you want an outsider's point of view. Please do reach out to Adrian. His contact details will be in the description, whether you're watching on YouTube, listening to us on Spotify or Apple or Amazon, wherever you choose to listen. the contact details will be there. And I hope you enjoyed this slightly different episode, because obviously we're normally interviewing people who are currently in the industry right now, whether that's equity release advisors, financial advisors, business owners. In terms of episodes we've got coming up, we've got people from previously from the FCA, we've got someone on AI, we've got other financial advisors who've now become business owners. So please do carry on subscribing and listening, because I want to continue to provide as much value as possible. But also, hopefully, you like this episode where it's got a bit of update on the recruitment market as well. So thank you for listening, and we look forward to seeing you on the next episode.